So the basics of any strategy, you need to know what high is and what low is. Price always forms uptrend and downtrend. An uptrend and a downtrend cannot be formed without price first forming highs and lows. So what is an high? An high looks like this. An high looks like an N shape, looks like the letter N, while the low looks like a V shape. So this point where price moves from the down and gets to a particular point, then reverses backward, that point here like this point is what we call our high. Now for the low, the point where price goes down, gets to a particular point and goes back upward, this point is what we call a low. Let's assume that price forms a chart, something like this. This looks like an M shape. So this point, this and this, these are all highs. Do you understand? Highs is like highs are top, highs. You understand? Then lows at the bottom. Lows at the bottom part. You can see from this point, this looks like a V shape, right? So these are lows. This place is a low. This place is a low. Do you understand? From here, we've identified our highs and our lows. If you want to trade, you need to be able to identify highs and lows. It's very important. Once again, highs are your N shape, while lows are your V shape. Next on is what we call trends. Now, this trend is how you know the direction in which price is moving. It helps you know if the safer chances to buy, safest chances are to sell. So we have three types of trend. We have uptrend, we have downtrend, we have consolidation or sideways bias. Now let me explain what this means. For an uptrend, from the word up, you know that it means what price is going upward. It means the market is buying. Now you can see from my example here, it looks like what price is going upward. You can see it's going upward. You understand? Then downtrend. You can see that price is going downward. Consolidation happens within a particular area. Then it forms like this, like this, like this. For the uptrend, price needs to make more of higher highs, and for the downtrend, price needs to make more of lower lows. You get? So for the consolidation, price is in a particular area. It doesn't go higher, or it doesn't go lower, it doesn't go deeper, or it doesn't go higher. It just stays within a particular range or within a particular area. How do you identify your uptrend? To identify your uptrend, you need to be able to identify your higher highs and your higher lows. To get a downtrend, you need to know your lower highs and your lower lows. What are higher highs? Higher highs are new highs that price forms that is higher than the previous high. Now let me explain what that means. This is an N shape, if you remember from what I said before. You need to draw out the heights of the high. If price forms a new high, it breaks out of this point, something like this, right? So now, this is an N shape, this is another high, right? So the fact that this high was created above the previous high, then put it in layman English, the fact that this high was created taller than this previous high, this makes this new high an higher. So simple. Next, higher low. Higher lows are lows that are formed higher than the previous low. So let's give an example. So this is a low, right? So what we do, we'll draw a horizontal zone here. If price forms a new low and the low is above this previous low, it makes it a higher low. Let me show you for example. So let's say a new low was formed at this point. You can see this is the new low. It was formed above the level of the previous low. Do you understand? So this point here is what we call a higher low. For downtrend, you need to know what is lower high and lower low. For the lower high, it means highs that are created that are lower than the previous high. So let me give you an example. This is an high N shape. This is the level of the first high that was formed. If price forms another high at this point, so the new high was formed below the previous high. So this particular high is what we identify as our lower high. For our lower low, it needs to be a low that is lower than the previous low. Let's say a low was formed, V shape, this is our low, we mark the level. If a new low was formed, that breaks out of the previous level, that goes deeper than the previous level, and it forms a new low. Like you can see, this now a V shape, so we can call this a low now. So if a new low is formed below the previous low, below or deeper than the previous low, this is what we call our lower low. For summary again, for uptrend, you need to know what is called higher high and higher low. For downtrend, you need to know what is called lower high and lower low. Your higher highs, they are highs that are formed higher than the previous high. They are highs that are formed higher or above the level of the previous high. That is what we call higher. Higher lows are lows that are formed higher than the level of the previous low. Lower high is an high that was formed lower than the level of the previous high. This is a new high, a high that is formed lower, goes lower. It doesn't get to that point, it doesn't go above, it stays lower than the level of the previous high. Lower low is a new low that is formed lower than the level of the previous low. With this knowledge now, you can now move on to identifying your uptrend or downtrend.